Hey everyone, Mike Clark here, and today I'm with Brian Tenius of Brian Tenius and Associates, and we're going to go down some more complicated items related to business owners. There's a lot of changes in the most recent tax law, and Brian's certainly the guy to talk about it. So, how you doing?
I'm good. How are you?
I'm good. I'm good. Thanks for joining me today.
So some of the more commonly asked questions, 2 or 3 items that we get all the time every year. The first one is regarding Form 5498, which is the form that reports the value of IRAs.
Thank you for bringing this up. Yes.
Every year in May, typically
Yes.
in May, we start getting phone calls. Hey, I filed my tax return 2 months ago. I just got this form. What do we need to do? So the 5498 really doesn't apply to most people. The idea is it shows the value of your IRA at the end of the year that you'll use the next year to figure your required minimum distribution if you're over age 70 and a half. So anybody who gets the form 5498 under age 70 and a half, it's just an informational form, file it.
Yeah.
You don't need to do anything with it.
The other thing we have clients that have been with me 8, 10, 12 years, and still to this day, Mike, I got this form 5498. What do I do with it, right? The other thing that form does is it gives the amount that person contributed to the IRA.
Right.
So a lot of times during when that's received, sometimes clients are frustrated. Why do I get this so late? Well, the reality is you have until April 15th to make contributions to the previous year. So they're not going to send you a document without it being the full period of which you can contribute to it. So if clients request or believe they need confirmation that they made contributions to an IRA, what do you recommend that they provide you?
We just prefer to talk to the investment advisor and confirm it that way.
Just confirm it that way, right. And really your statement, at least for all of my clients who are either at Charles Schwab or TD Ameritrade, on that statement, it shows them what their contributions were for that particular tax year. So that's always a reminder for them.
Another question we get often throughout the year is, hey, I need to fill out a W-4. I started a new job. My son is starting a job. How do I fill out the W-4? For most children, especially under the new rules and the higher standard deduction, they can earn up to $12,000 and they will pay no federal income tax. So to avoid having to file a return, kids working summer jobs part-time, even if they're your dependent, we want them to mark exempt. So they can put exempt in the box and they'll withhold no federal tax. That way they don't have to file a return to get it back.
Yeah.
More importantly for people, especially maybe people who got married during the year, it seems to make sense that if you get married and you fill out a W-4, you mark the box that says married. But when you mark the box that says married, your employer is going to withhold like you're filing a joint return, but your spouse doesn't work. So people who do that are often caught short on their withholding because they both are withholding at a married rate, but they're both working, and then we combine the income, they're short. So there's another option on that form that says married but withhold at single rate. So generally, married couples who both work don't mark the box for married filing status on your W-4, mark either single or married but withhold at single rate. Because we see that every year. People change it, they get caught short and say, why do I owe so much tax?
And I would imagine in your world, nothing will tick off a person more than to owe a lot in tax.
Especially when they don't anticipate it.
Yeah, they're not expecting it. One thing you mentioned earlier was children who make less than $12,000, they are exempt. It's common for many business owners to have kids that do work. They work in the summertime, they help with filing. Maybe I know some people, their kids are in their commercials, whatever it might be. Does it make sense if they're working to compensate their kids?
It does. For a couple of reasons. You're spreading the income out to lower brackets or not taxable at all for the kids bracket, and the parent gets a deduction for the wages. It also allows you to do a Roth IRA contribution for your child, which I think you agree is an awesome thing.
Yeah. To
put $3,000 to $5,000, $6,000 a year in a Roth IRA for somebody who's pre-teens, early teens, and do that for several years and let that accumulate for 40, 50 years. They should come visit you in the nursing home if you do that.
They should. At least bring you some juice or something.
Hopefully,
right?
Yeah.
With that said, though, obviously you have to be able to do that. It can be daunting as a parent to say, okay, I'm gonna raise them, I'm going to pay for their college, and I'm going to help fund their retirement.
Right.
But the reality is, if you're a successful business owner,
You can-
and you have the ability, if you look through your goals and objectives for your own retirement and your own life, and you're more than on track, why not? I mean, you're really helping out your kids.
Mhm.
So please note that everything discussed today is meant to be for educational purposes only. Brian Tenius and I do not know you, let alone your situation. So nothing should be construed as investment or tax advice. Thanks.